We are now joined by Lucy Corkin, who's a country risk analyst at RMB. She's here with us at the desk, and she'll be chatting to us about how central banks of African countries are stepping in to protect their local currencies. Lucy, thank you so much for making the time to join us today. Where exactly are we seeing a lot of the intervention coming from? Which countries specifically are doing this?
Well, Tumi, what we've seen in the last year, actually, starting from Angola, which made an intervention mid last year, 2013, we've since also seen Zambia and Ghana central banks both actually make fairly interesting and wide-ranging pronouncements in terms of how they want to manage their FX policies going forward.
So they're stepping in to protect their currency, but there should possibly be some similarities within these countries. So what have you seen, are the similarities that they share?
Well, essentially what these banks are trying to do is increase the circulation of the local currency, because all three of these countries are very heavily dependent on natural resources. Angola and Zambia have more of a history of this, but obviously with Ghana's new oil assets coming on stream, Ghana's currency will very soon be heavily reliant on the production factor of this industry. And so essentially these banks are trying to reinforce the circulation of these currencies, and even though there are certain nuances in these economies that don't bear any resemblance at all, broadly speaking, it's almost like there's been a kind of a flow over from the economic evolution of these countries in terms of trying to strengthen the currency to better reflect what's actually happening in the dynamism of these sectors.
Now, do you think the central bank is possibly the best tool to be using? Does this work when central banks step in to protect their currencies?
Well, that's definitely a point of contention. I think particularly in the Ghana case, when the Ghanaian central bank made certain pronouncements in February about the controlling of Forex, it was incredibly unexpected, and as a result, in terms of taking the market by surprise, whereas essentially the intention was to increase the usage of the cedi and perhaps bolster its value, the cedi actually devalued, which is not a good thing, given that it's been one of the worst performing African currencies in the last year, devaluating against the dollar by about 23% sort of last year. So, Another interesting point is that, particularly in the case of Ghana and Zambia, these are countries with yawning budget deficits, and the weakness of the currency is actually underpinned by these fundamental structural factors. So whereas superficially it does seem like a good idea to start introducing these kinds of FX controls, unless the fundamentals of that economy are actually addressed by reining in public spending, it's not actually going to resolve the problem that they're looking to find a resolution to.
How are you finding investors responding to this? Because you said, especially in the case of Ghana, where it was somewhat of a surprise, how are they responding to it? Because they weren't expecting this. So what have you seen as being a response?
Well, that's actually the key issue, and the key issue is the implementation and the communication that the central bank has with the market. So if you look at the case of Angola, this was a process that was started in January 2012, and the central bank was very open with its communication in terms of a series of directives that were issued over a period of about a year, phasing in the way that, in this case, the oil sector was had to bring most of its payments into Kwanza accounts and to pay all of its services through Kwanza accounts. But it was much anticipated, and it was very much a phased through process. Whereas if we look at what happened in Ghana last month, this was very much a surprise announcement. The directive itself was 2 pages, and it didn't seem to give enough granular detail for investors, and there was a lot of white noise in the market. The central bank has since tried to issue clarifications, but this also detracts from the role of the central bank in terms of its credibility, because it seems to be backtracking in certain sectors, and it isn't seeming to stick to its guns, so it's almost made the situation worse by trying to muddle through without having given enough detail in the first place.
Some news flow out today. We saw that Zambia's kwacha has been extending in its losses against the greenback. It's now sitting at a new record low, but the central bank said they're not going to be stepping in. Would you say this is a wise decision on their part at the moment?
I think from the perspective of the Zambian central bank, it depends very much in terms of how much firepower they have in terms of their foreign reserves. I think one of the issues that the Zambian central bank has had is that it hasn't been able to capture enough of the dollar reserves with the mining sector. And so in terms of its intervention that it made a year ago, that was specifically to retain enough dollar reserves to be able to have the kind of firepower that the central bank would need for an interventionist monetary policy. At this stage, however, I don't think that they have the ability to do so. So it's not surprising that they're prepared to stand back and let the market take its toll.
Lucy, I wanted to get your opinion on this just before we close it off, because this article was written specifically about Ghana, especially after the measures that the central bank took. And I'm just going to be quoting, and it says that, this is a good example of the kind of risks that remain in Africa. And this is a cautionary note to a narrative echoing that overly optimistic statements about the Africa rising. Would you say this is one of the risks that one deals with when they do enter the African continent?
Look, I think the reason that Africa is so exciting and the reason that the rewards are so high is because there does remain very real risk. One of the key issues with these kinds of policies is, again, not necessarily the policies themselves. The fact that there is a definite evolution towards strengthening the local currencies is very important. So this is definitely a positive move. The negative is perhaps the way in which it's been implemented. And so as the central banks gain confidence and perhaps create better communication with investors, then it will be better implemented in future, and so we can expect better, more transparent and more open communication between the central bank and foreign and local investors.